You're listening to Seven Horns AI, your AI-powered market update. It's Sunday, June 7th, 2026, and the U.S. markets are closed for the weekend, giving us a chance to review a dramatic close to the past trading week and look ahead. The week culminated with a significant pullback on Friday, delivering the worst single-day sell-off since October. The S&P 500 declined 2.64% to 73.83, while the tech-heavy Nasdaq Composite sold off broadly, down 4.18% to close at 25,709. The Dow Jones, while finishing lower by 1.35% at 50,866, demonstrated a dramatic intraday reversal, having hit a fresh all-time high of 51,660 earlier in the day before shedding nearly 800 points from its peak. This growth-to-value rotation saw defensive sectors like financials and healthcare outperform. Two major catalysts drove Friday's action. First, chipmaker Broadcom, despite strong second-quarter revenue of $22.19 billion, saw its stock plummet. The company maintained its fiscal year 2027 artificial intelligence revenue target of more than $100 billion, instead of raising it, and its third-quarter AI chip guidance of $16 billion fell below analyst expectations of $17.2 billion. Broadcom's stock dropped 7.92% on Friday, contributing to a two-day wipeout of roughly 20% and erasing some $286 billion in market value. This signaled that AI enthusiasm is now priced for perfection. The ripple effect was felt across the semiconductor space, with Marvell Technology, which was down 16.74% in Friday's regular session, rallying 6.2% in extended hours on news of its S&P 500 inclusion. Navitas Semiconductor also saw a significant drop, falling 18.23%. The second catalyst was the May nonfarm payrolls report, which showed the U.S. economy added 172,000 jobs, significantly crushing consensus estimates. The unemployment rate held steady at 4.3%. Markets interpreted this as unambiguously hawkish, sending the probability of a Federal Reserve rate hike by year-end surging to roughly 70%. Megacap tech stocks were broadly lower, with Nvidia down 6.20%, Tesla falling 6.56%, and Meta losing 5.51%. Even Apple and Google, while showing relative resilience, ended the day lower. Internationally, Asian markets also saw weakness, with the Japan ETF down 3.62% and the China large-cap ETF down 2.03%, reflecting a broad risk-off sentiment. The Nikkei 225 closed down 1.31%, and its futures indicated a further decline of 5.83%, suggesting continued selling pressure. Looking ahead, there hasn't been any significant breakout news over the weekend to shift the momentum dramatically. However, the week ahead is packed with macro catalysts that will test investor sentiment. On Wednesday, we get the May Consumer Price Index report, with headline inflation expected to rise 0.46% month-over-month. Thursday brings the Producer Price Index and a highly anticipated European Central Bank meeting, where a 25 basis point rate hike is expected. Friday rounds out the week with the University of Michigan consumer sentiment data. Tonight, S&P 500 futures resume trading at 6 p.m. Eastern Time. Following Friday's broad sell-off, particularly in tech, traders will be watching closely for any signs of stabilization or further deterioration. The tone set by U.S. futures will likely influence Monday's Asian Open, which is already under pressure from Friday's global risk aversion. That's your weekend market review from Seven Horns AI. Enjoy the rest of your weekend, and we'll see you when the bell rings Monday. Visit sevenhorns.ai for more insights.